EQ Bank stock is surging as the parent company of Equitable Bank is buying PC Financial from grocery chain giant Loblaw on a deal worth an estimated $1.3 billion. We're going to get some clarification on that. We'll also include all of Loblaw's insurance companies. Let's get more on this from Chadwick Westlake, the president and CEO at EQ Bank. Chadwick, thank you very much for joining us. Just to clarify, we saw, I believe, $800 million earlier. Now we're saying $1.3 billion. Can you explain the discrepancy, the changes on that?
Sure. We're so excited. No, thank you. Thank you, Roger. We're so excited about this transaction. The deal value is about $800 million. The difference in the $500 million is excess capital that they can take out of the business, and we'll take it at that 13% for $800 million, which is an excellent deal for both parties.
All right. So why go ahead with this? What did you like about it from your side?
Absolutely. I think really important when you step back and think about this transaction, this is a great day for Canada. This is a great day for Canadian banking, for bringing change and more choice in Canadian banking, bringing better value to Canadians. It's a very important part of this. And the time was right. We've thought in our strategy for years about how do we bring the challenger to Canadian banking, to bring more option and competition. And we thought, you know what, payment solutions are very important. We need to add that to EQ Bank. And I think similarly, Loblaw thought, how do we bring the best of our PC Financial to Canadians? And we saw aligned culture, we saw aligned businesses. You add these products and teams together, and you have the dominant challenger serving millions of Canadians underpinned by PC Optimum.
And how do you say Canadians are going to benefit from this then?
More product offers, absolutely. And now EQ customers get the benefit of PC Optimum, and PC Financial customers get the benefit of the EQ products. And together, you actually can bring better value, innovate even faster. We can be available where the customers are across stores across Canada. And we both have modern technology stacks and a belief in low and no fees and new and different options, especially for underserved Canadians. And we think there's millions of Canadians that will benefit from this.
Now, any concerns with this deal? The stock levels, the shares are down. The last number I saw was about 12%, and that's what they're going for. Any concerns that it's a little low for what you're doing?
No, our stock, when you have a great deal, right? When you have a great deal, you do the great deal. That's what matters, and that we're creating great shareholder value from this. This is very good for our customers, for our employees, for all of our stakeholders, and this is accretive in year one from an EPS and an ROE perspective. So that's what we're thinking about in the long-term value creation, and this is a partnership. I'd say Loblaw is looking at this as an investment. This wasn't a sale process. This is about a partnership in Canadian banking, and that's what this is, and we're going to create a lot of shareholder value that way.
And Loblaw is staying involved with this. They're going 17% and buying back up to 25%, or buying up to 25%, right?
That's right. That's right. They'll have active involvement in this, and they really believe in the purpose of this. So they will get 17% at closing, which we expect will be sometime next year. And then they can buy up to 25% of the company, as well as get 2 seats on our board.
And what made them decide it was time to sell?
Well, I think they were looking at how do we take PC Financial to its fullest potential? And where is their shared culture in products? And they saw EQ Bank, which is literally the trademark challenger bank in Canada. And they got to spend some time with us. And they saw our management team, our track record, and they thought, you know, we want to put this in the hands of bankers, and we want to stay part of that. So we've trusted each other. We've spent a lot of time on this. We've spent about a year getting ready for this. So the time was right to really step in and really support our bank to take that forward with their active involvement.
Now, you're coming out of your earnings report as well. Missing estimates, earnings per share, $1.53. The estimate was $1.99. Is this the time to be doing something like this?
Absolutely. It's right on strategy. And this is such an important time, I think, for competition in Canada and competition for Canadian banking. I've been in the job about 100 days now, and we've refocused our company around a few things that matter most. And 2025 is behind us. That was a difficult year, but we're in a new chapter now. We couldn't be more excited about what's ahead. And this is exactly on strategy with completing our product shelf, bringing those payments and digital solutions together with all of the rest of our products and services. And the time was absolutely right. I've never felt we're better positioned for more competition and choice for Canadians than now.
Now, some of the analysts have concerns about credit as an issue for the bank. With the credit weakness broad-based across the portfolio. I'm just reading some of the notes here. Sure. The uninsured single-family book continue to be affected by soft housing conditions. Are these not concerns for you? Should they not be looked at before you think about buying?
Yeah, nobody has a crystal ball in the market. What I can say is we closed Q4 with a very strong position on our credit book. We believe it reflects all the forward-looking indicators of where the economy may go. Again, you don't have a crystal ball to say, but we feel very well provisioned now for what's ahead. And we do have built into our models some downside readiness. The housing market may be slow for a little while. Canadians are struggling, and we want to help them with better products and solutions on the other end of that. So we do think we've closed the book on a difficult year, and we're coming into 2026 from a position of strength.
And what do you see going forward? What do you see over the next year then?
Yeah, we provided some outlook where we see from where we exited Q4 with ROE, we see ROE expanding pretty meaningfully, 400 or 500 basis points next year. We see our earnings per share probably increasing in the range of 12 to 15%. And we see credit, based on everything that we know now, stabilizing and moderating it more for us next year.
And what's giving you that confidence?
Well, we understand our loans. We're a lender. We've been lending for 56 years. That's how EQ was actually formed. And we're going to 10 years as a digital bank, but underwriting and lending is our expertise. So we've taken apart our lending book. We've looked at all the stress scenarios in the market. And we believe the provisions we've taken position us well for some downside based on what we know. Anything can happen in the market, but we're well positioned for everything that we believe to be true in the next 12 months. Yeah.
Okay, so that's your first 100 days. They talk about that with governments, that first 100 days. What's next? It crossed my mind earlier. Yeah. I mean, is this setting up for EQ to be sold maybe? Because now you've got a bigger pie that looks a little better?
I wouldn't say that. I came back because I believe in Canada's challenger bank and the need for better choice and options for Canadians. And we are only focused on Canada. So I'd say I don't think about this company being sold. I think about this company growing and becoming stronger. And I think everyone wants to see us compete. We are the challenger. We can actually bring competition to the incumbents. And we're going to build it and we're going to execute to make sure it is the best bank possible for millions of Canadians. Our scale is changing completely with this now.
So will you build it through further acquisitions or just trying to build customers?
We're going to execute what we started with PC Financial. We're focused on our core businesses in single-family lending, reverse mortgages. We're a large commercial lender, especially on the insured side and helping with affordable housing. And we're going to finish EQ Bank now with this product shelf. You might see more on the wealth management side come up, but first we're going to execute this and get our core businesses going, which we are. And we have the leadership team in place. We'll have the brand recognition in place where before probably 80% of Canadians didn't even know we're here. Now they're going to know we're here, and we're going to serve all of them very well with these new solutions.
Okay, Chadwick, thank you very much for joining us today.
Thanks for having me. Really appreciate it.
And that was Chadwick Westlake, President and CEO of EQ Bank.